Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now circus lay performer, and of course, multifamily real estate investor, Barri Griffiths. Now today we're joined by Paul Sian. Hey Paul, how you doing, man?
I'm doing great. Thanks for having me on.
Yeah, absolutely. I'm glad to have you on, man. Excited to dive into today's conversation. But before we do so, do you want to kind of give us a brief introduction to who you are and what you've been up to?
Yeah, I'm a real estate agent here in Cincinnati, Ohio. I'm licensed in Ohio and Kentucky, so I work with customers on both sides of the river here. I'm also a licensed attorney. Been a licensed attorney for even agent both a little over 15 years. So on the attorney side, I'm a real estate and contracts law attorney. And on the real estate side, I work a lot with multifamily investors and just Cincinnati. The way the market is, as you know, as an investor, I've got a lot of out-of-state investors. It just makes more sense for the California or the Las Vegas people to come out here and invest. You get a better purchase rate and a better cash flow compared to what you can buy in your area.
Yeah, absolutely. And we'll talk a little bit more about the market because I'm in the Cincinnati market as well. So I'm interested to see what you think and you feel for the market at that point. But, going back, you're an attorney and a real estate agent. What made you not stick to just the attorney side and also want to be an agent as well?
When I was in law school, I was living in Michigan at the time. And so my mom knew a real estate broker there. And she said, why don't you go work with him? To get some experience, and this is during law school, kind of help build up your resume. So I worked with him. He was a great broker, kind of guided me and, encouraged me to get my license at the time. And getting a real estate license, as you know, is not that difficult. In some cases that's a bad thing. In other cases, it's a good thing. But so I got the license. I was licensed in Michigan for about 7-8 years. And then, when I moved down here to Ohio, I let the license go. I was also in the military at the time. I was a judge advocate, military attorney, basically. And so, that and a full-time job, I was busy. But then once I stepped out of the military life, it's like, hey, I need something to do. And, one of the agents I'd worked with to help buy our house, didn't really steer us right. And I was like, I know I could do better than that. So let me go back in. And so in 2014, I got both my Ohio and my Kentucky real estate license. And just knowing from the legal aspects too, the real estate and contract law, I can better guide, either whether they be residential buyers or investment buyers. It kind of gives that added advantage, so to speak.
Yeah, and do you do much contract law now, or are you strictly on the agent side?
No, actually, I guess the mix it varies too. I do, it's probably two full-time jobs. As real estate is, a lot of it is on weekends, and most of my clients are being out of state. It's kind of easier for me to do. If I need to go swing by a property, I can kind of do it on my own schedule. When you got your local buyers too, even that case too, most of them are working during the day, so it's the evenings, so it's flexible that way. And as an attorney, I don't do litigation or anything like that, so I'm not tied to a courtroom. If I need to set aside some work, I'm doing a contract review or a lease review for somebody, I can set that aside and go work on my, help my real estate clients out as well.
Yeah, well, I guess on that point, on the contract side of stuff, in terms of a real estate contract to purchase or sell, what are the main things, maybe just on a high level, that people should look out for, that maybe people miss, or that you see as a mistake that people make constantly? Because I'm sure you're seeing a lot of this stuff. Is there a constant thing that you see a lot of people make the mistakes, or stuff that people should really be looking out for?
In contracts, I think one of the things that always pops into my mind is there's a talk about earnest money. Oh, earnest money is required. Technically, legally, it's not required. It's ideal. A lot of states, a lot of locations, they have it where it's customary, and I always recommend it too. And a lot of times it can show the seriousness. You can put that earnest money down. Especially if it's a larger deal, the more money you're putting down, it shows you're serious. Even with the earnest money too, as long as the contract is written properly, you got all your contingencies in there. You have your inspection contingency, your appraisal, your insurability contingency. Your earnest money is generally protected. So that means it's if it doesn't appraise properly, appraises low, and you decide you don't want to do the deal, or there's something horrible in the inspection, you can cancel within that inspection period. get your earnest money back and then move on to the next deal. So it's, watching, having somebody who understands all those contingencies is important too, especially there's timelines. I mean, if you blow an inspection, whether you're it's busy, so inspectors are backed up, but if, inspector inspects literally on the last day of the inspection period, you don't get the report for 2-3 days later. But if you didn't request an extension, or you didn't, get something in writing from the seller, I mean, you're kind of out of luck. What's the issue with the building, but you find you've got a $50,000 foundation issue. Guess what? You can eat that. I mean, you can walk away from the contract, but be wary that the seller can turn around and sue you as well too.
Oh, wow, yeah. And well, that kind of brings me to the next point as well, is to the Cincinnati market. You're talking about these contingencies and stuff like that. And I know here in Las Vegas, a lot of these contingencies, people are waiving inspections, people are, taking out the appraisal contingency just because it's so competitive in Vegas. It's nuts. And I feel like the more I speak to people all over the country, it's kind of the same thing. What are you seeing in the Cincinnati market right now?
In terms of investors, I don't see as much of that. I know there's some who will do that. I had a four unit building that we had purchased back in 2016 that I decided to sell last year. Same thing. It was a cash offer. The person closed pretty quick. They wanted to inspect it. They did a short inspection period, I think 5 or 7 days. They, in those types of situations, I'd recommend, especially on the residential side where you're going to live in something, even on the investor side, have it inspected. I mean, it does make you more competitive, but I think at the same time too, we're going to see in a year or two, you're already reading articles about that. Somebody bought something without inspecting it, and suddenly they find out they got mold issues. Or I was just watching a news report with another real estate friend of mine, and so the inspector in that report was saying, yeah, he walked into a house where they did the inspection after they closed, and the entire basement ceiling, basically all the basement, the plywood and everything like that, was eaten by termites. So then the buyers had to go, they're going to have to eat that, get all those repairs done. So it's great, it's competitive, it might put your offer over the top, but you run the risk of, you end up with a house that, hey, you thought you got a great deal on, and now suddenly, you're $100,000 in the hole, and you're not going to be able to sell it for what you paid for it too down the line.
Yeah, absolutely. And then in terms of the Cincinnati market, then in terms of on the investment front, because like you said, you mainly work with investors at this point. What are you seeing? Is it very competitive? What prices just keep going up? What's going on in your opinion, and what do you kind of see?
Yeah, it is very competitive. I've got, like I mentioned, I work with a lot of out-of-state buyers, and so recently, perfect example. So this individual, he's buying with a VA loan, highly qualified buyer, great person, ready to move in. He's doing like a house hack. Well, he live in one unit and rent out the other units to pay for his mortgage. So great offer, strong offer. We were above ask, couple grand above ask. So, well above. And I think we even used an escalation clause in that one. He got beat out. So 17 offers on that one property. And it's just, it's crazy. I've heard another one. One of my lender friends was telling me that they saw one with 30 offers. So it's intense.
Yeah. You said there an escalation clause. For people who don't know, what is that?
And that's I like to use escalation clause. I've seen cases too where other agents will, the sellers will say, no, just give us your highest and best. But basically, an escalation clause is, you're coming in. Let's say you've got asking price of $200,000. You're going to offer right off the bat, my initial price is $200,000, but you've got a clause in there that says you'll offer more above the next highest offer. So let's say, you'll be willing to raise $1,000 over the next highest offer. And usually you put a cap in there too, like no higher than say $250, just to be safe, because you don't want the sky as the limit there. You end up $200,000 house and suddenly you're at $3,001, it doesn't make sense. So you cap it wisely, kind of cap it, look at the market, and basically you're willing to top the next highest offer, and then we use a standard form for escalation clause, and in it all the language is built in. Basically, you just matter of just plug and play. So plug in how much are you going to raise over the next offer, and then also you want written proof of that next highest offer, so that way you don't have that that agent in there trying to play games and say, hey, yeah, you've got a $500,000 offer in this house. Are you ready to bid that up?
Yeah, but it can be, if you're willing to go higher, but you really want a house, that can be a great thing to put in there, right? Because at that point, you'd hope that gives you a better chance of getting that house, right?
Yeah.
But
yes.
And as you mentioned, with it being so competitive, that in the example you said, there was 16 offers that they got beat out on, and some of the ones that they have 30 offers, right? But how with your buyers right now, what are you having to do, and what are you advising them to do to try and win some of these properties with so many other people bidding against them?
And just let them know. I mean, right off the bat, you get a sign that, the showings are all booked up. So that's a sign there. You're going to be dealing with multiple offers, and just reach out to the seller's agent and say, hey, when do you have, do you have multiple offers? When do you want your highest and best? And then just know that, as a buyer, asking price or anything below is not going to work. So you need to be ready to, if you're not ready for that, I understand. I don't want to force you into something you don't want to do, but let's sit back and wait, until this market corrects. But for others there, though, who really want something now, or really need to invest in something now to deploy their capital, then yeah, let's look at escalation clauses or bidding up above, and let's shorten our time frames. Let's, rather than doing like a 10-day inspection period, let's try and do it in 5 to 7 days. Get on the phone right now with your home inspector and say, hey, I need, what's your openings like? Can we get in there quick? Even with inspections too, another thing I advise is, rather than, you can do the inspections, but we'll just do it for ourselves, for our own purposes, and give us a yes or no. Basically, we're not going to ask you to do any repairs or reduce any price, but if we find something in there that's scary, then we'll just say no and we'll walk away, and no harm, no foul between anybody. So that's a little quicker for the sellers. They're a little more comfortable with that too. Ideally, as the seller, I'd love it if the buyers waived all the inspections, waived the appraisals, and that would be a perfect ideal situation. But as from a buyer's perspective, I'm advising them, yeah, let's do it, but let's just say, okay, we'll take it as is, but we want the inspections for our own sake.
Yeah, and that's smart. And I think, like you said earlier, I think unfortunately this might come back to bite a lot of people, because people are getting caught up in these bidding wars. I need to get a house, I need to buy something, I'm willing to do whatever it takes to buy that. And that's all good and well to be not willing to purchase something, but you could be missing something. Like you said, it could be a foundation issue, there could be a roof issue, these could be major capex items that come back and bite you. And I think, like you said, doing it the way like you're saying now is that, yes, we're not going to come back and beat you up over the head about any major repairs, but we have the power to walk away if we see, like you said in the example, if there's termites or if there's a foundation issue again, you have the power to walk away. And I think that's a very smart move, because you want to have that, right? You want to have that ability to walk away if you see something that is major. So I think that's a great way, because like you said, sellers now, they have their choice, right? Do I want this one? Do I want this one? They have so many offers coming in, right? And it's just, they have all the power right now, and they have an insane amount of power, because if you have 16 offers coming in, right, you can kind of do what you want to some extent. So
exactly.
It's crazy. You mentioned it there. Some people are sitting on the sidelines waiting for the market to correct. Do you have a feel for that at all? Or do you have any, nobody knows, right? Nobody, if anyone tells you that they know, they're lying, right? But we all maybe have a feeling, or we have an insight or something that maybe you could share, or something, just how you're feeling about things.
Yeah. I wish I was that accurate. I'd probably be doing podcasts like you then too. It's like, hey, yeah, here I'm the, but it's I want to say we're at the tail end, but the way the economy has been going, we're kind of in a strange situation now. The economy's starting to open up, so you're going to start seeing more economic activity. So you might have fewer people, interested in buying houses now. Instead, they're out there, they're doing their vacations, they're spending time outdoors, whatever, with friends and whatnot. So the desire to get that next house might not be there. So at the same time too, we discussed how some of these buyers are buying without the inspection contingency, without the appraisal contingency, and I'm sure there's going to be some heartache, some upset stomach after they realize, well, we bought a house that has mold in it, we can't live in it. Or there's a foundation issue. It's going to cost us $40,000 to repair, to shore up that foundation. We can't afford that. So, what do we do? So, unfortunately, in those situations, people might start, being forced sellers, or they might, in the past, we've seen they just end up walking away. And, those kind of work their way back into the system, and they kind of help balance out this situation. So we're going from the seller's market then to a buyer's market.
Yeah. As a buyer right now, I'm hoping there is some, as an investor, you always hope that there's some discount at some point, but it's just so hard to guess, right? I mean, like you said, that you never know. And the economy and the real estate market, there's so many moving parts to it. It's so hard and I always feel like it's something that you won't see coming. You'll think that it's going one way.
Exactly.
And that's a good point that I never thought. Like with the economy opening up, people might be too busy doing stuff, or they might decide that they want to spend money on vacations, on experiences, and not spend all this money on housing. And, I think with everything right now, the sentiment is that housing is hard. We need to buy housing. But I think if that changes, right, if the sentiment changes, the way people feel about housing changes as well, that can change pretty quickly. And once that changes as well, it kind of just leads to somewhat of a downward spiral. So yeah, it's just, I don't know, it's fascinating to try and predict, but none of us can predict, right? And try and if only we could, right? I know
exactly.
I'd be a billionaire already, I guess, if I could predict it anyway whatsoever. So it's interesting. But you mentioned something on one of the notes that you sent me, is that you also work with first-time investors, right? With newer investors as well. For people out there who are new investors or are looking to get into the game, do you have some tips for them to sort of advise them and guide them of, what they should be doing, what they should be looking out for starting out?
Yeah, definitely. Understand, I guess primary is understand your market. And as working with myself, I work with a lot of out-of-state buyers. If you've ever been to Cincinnati, I recommend, if you can, just come here, drive around, just, you don't need to ask anybody, just go ahead, start driving neighborhoods, look at listings online, see what you see, and then go drive those neighborhoods. Do you like those neighborhoods? Would you be comfortable living there? Would you be comfortable investing there? And that gives you a good sign. Okay, yeah, that I like this market. The prices make sense to me. Look at other sources. Go look at your, I like to use hotpads or apartments.com just to see what's the rents going in these neighborhoods. And then, get your numbers set. What kind of numbers are you looking for? What kind of cash flow do you need? While appreciation is great, don't invest just for appreciation. I mean, there's a lot of markets out there where it's great. For the past few years, people have invested, they've been appreciating. It's great. But, as we saw in 2007, 2008, it's not always a sure thing. But cash flow, that's cash flow should be a sure thing. And then set up your teams. Get your real estate agent involved. Get your, make sure you have an insurer on hand who can give you good quotes. Make sure, especially you're doing it out of state, get a property manager involved. A lot of my clients too is I will chat with tell them, let's talk to a property manager first. You send me a deal you find you like, I'll look at it. If the neighborhood's kind of iffy and I'm not sure, I'll shoot it back to them and say, hey, did you talk to your property manager? What did they say? Will they manage in that area? If they don't, that's a good sure sign that maybe we can go find the next deal.
Yeah. And with that, how do you build that relationship with a property manager? Because as a new investor, you don't have any properties with these property managers, right? How do you build that relationship with them so that they're willing to take a look at your property? Because you don't want that every property that comes up, you don't want to be like, look at this one, look at this one, look at this one, right? And they haven't made a penny from you yet, right? They're running a business as well, right? It's important to remember.
Yeah.
So how do you advise them on building that relationship initially with a property? Because that's key, right? Having a good property manager on your side.
From my own perspective, what I do is I've got already the network and the relationships with property managers. I mean, when we owned our 4-unit, we had a property manager working. A lot of my buyers are working with property managers. So I see who are the ones I trust and who are the ones I'm happy to refer. So it's same thing too is, I definitely don't encourage my buyers to go, chase them down every time, like you mentioned, to, hey, what about this one? What about that one? That's where I'm here for, so there's a lot of, uptake, but hey, shoot, I send out the searches. I've got a website with the MLS feed, and I send out the searches. And so if you find something, let me know. If you find something off market, let me know. Let's chat. I can help you on the, maybe we don't help on the real estate agent side, but I help you as an attorney. But basically, let's look at it. Let's screen, right away. I know Cincinnati. I know the Northern Kentucky area, so I can tell you, if you're only interested in A and B neighborhoods, you send me a C neighborhood, I'll tell you off the bat. Okay, this is a C neighborhood. Here's your potential rents, here's your potential, this is what you might be looking at for repairs. If you're interested, let me know. If you pick one of those iffy neighborhoods where I know you only want A and B, I'll tell you off the bat, okay, that's a D neighborhood. If you're really interested in that, then, let's talk, and then also talk to your property manager. If they say no, they won't they wouldn't be interested in managing it. That's a quick thing that they can do. They, yes or no. Property managers should know their neighborhoods as well too. And you give them an address, say, is this something you would manage? If they say no, then that's a good quick screener for you.
Yeah, and that's a good point. There, it's not like you're asking them to pull rent comps or to dive into the numbers or anything like that. Is it just a quick yes or no? And that's very smart. It's very smart. Well, Paul, this has been fun, man. It's been an interesting insight into Cincinnati. I like the Cincinnati market as well. Hopefully, nobody listening to this wants to invest there, because I don't need any more competition. But it is a great market, and and you're definitely a great resource for anyone to, if they're looking to invest in that market. But as this show is called Wrestling with Real Estate, I like to incorporate some wrestling-related real estate questions. And the first question is, what would your wrestling name be?
I would probably go with Smooth Operator. I try to make everything, smooth for everybody.
Yeah, I like that. You said you used to watch as well. You used to watch WWE, right?
Yeah. I was a big fan of Hulk Hogan, Randy Macho Man Savage, and a lot of the, Ric Flair is another. So as a growing up in high school, and my brother and I, that was, one of those things we used to do on the weekends when they would pop up.
Very cool, very cool. So that's why you're so good at this, obviously, this round. Every wrestler has a special move. What is your special move?
I would think my special move is just bringing the market intelligence to the deal. Basically, hey, here's what you need. So I'm bringing everything to the deal that, kind of to make it fit for you, make it make sense for you, or make it, pointing out that doesn't make sense for you. Kind of giving you that insight, that information that, okay, you're ready. This is a property. Let's move forward on. Let's start talking about next steps, versus, no, this is a bad deal. Let's move on to the next one.
Yeah, very cool, very cool. What's been the biggest body slam you've taken in your real estate?
Body slam is when I first purchased that 4-unit. I was contemplating becoming a property manager, so I said, let me manage this property myself. So it was the building was a C-grade building in a C-grade neighborhood. It was just, I didn't lose money. I didn't necessarily make money either. So it was it was challenging, and it was new to me too. And so after a while, I was like, okay, I'm an attorney, I'm a real estate agent. I'm not going to be a property manager. Let me go bring in a property manager. And, he came in, he took over, he kind of did some rehab work for me, put in, brand new tenants. And after that, it's like, when I first owned it, I remember I was going, at least once, twice a week just to handle one thing or another. And that's, that's a lot of time away from doing other things that make me money. So once he took over, I think, there was like a period of 6-7 months. I was like, I haven't been there. And I was like, it was a relief off my head. So that pretending to be a property manager was a big body slam.
Right. And that's a good lesson for a lot of people, right? A lot of people do. Some people love it, right? They love property management and they do it themselves. But some people like yourself realize that their time is better served doing other stuff and to hire a property management. So was there a moment that you were standing on the top rope, getting ready to jump, but you were too scared? What was it, and how did you overcome it?
There was when we bought that property in 2016, we were buying, we were looking at a couple properties, and that was kind of the time too, the market was heating up. And so there were multiple offers at, not as much as we have now, but so initially I had my heart set on buying in Northern Kentucky because it's close to our downtown Cincinnati area. I think you could find better deals at the time. It's less competition. So there were a bunch of offers that I kind of, I was ready to put an offer on, but I hesitated for one reason or another. And then when I was ready, then somebody already put an offer on and went pending. So it happened like 2 or 3 times. And then, then finally I was like, okay, when it came to this 4-unit that we finally bought, that's when I was like, okay, let's just, let's stop sitting on the top rope, like you say, and let's jump in and get this done.
Yeah, very cool. I'm sure you were glad you did in the end, because it's, even if you didn't make a lot of money, the experience and the lessons learned at the time is so invaluable when it comes to that. Well, Paul, thank you so much, man, for making time. This has been a really fun interview. It's been a lot of great tips and tricks and sort of insight into the Cincinnati market. And for anyone listening who might be interested in working with you, how can they get in touch and how can they find out more about what you got going on?
Yeah, definitely. My website, the easiest link to get to it is realcincy.com. That's REALCINCY.com. I've got my email address there, phone number. Feel free to reach out. I'm pretty active on social media, Facebook, LinkedIn, Twitter, what have you. So I'm happy to, if you want to reach out to any of those via those mediums or via email, like I said, I'm here and happy to help.
Perfect. Well, thank you so much, and have a great rest of your day out there in Cincinnati.
Thank you again.